I had a chance to speak with Peter Schiff, chief strategist at Euro Pacific Capital. He believes that underemployed number is something the U.S. should be weary of.
And once again, the devil is in the details. Yes, we did create 195,000 new jobs, but they're part-time jobs. We actually have fewer people working full-time in the month of June than the month of May. We create over 300,000 part-time jobs. So it looks like we're adding jobs. We're really losing jobs. You know, these are jobs for waiters and waitresses. You know, employment in bars and restaurants is at an all-time high. What's happening is that people are losing their full-time jobs, and so their employers are having to hire part-time workers to pick up the slack. But this is not a robust job market. In fact, I think the real U.S. economy is getting weaker. We lost another 6,000 manufacturing jobs in June. That's the fourth consecutive month where we've lost manufacturing jobs.
As you dig into this report, any good news at all?
Well, I suppose it could have been worse. But, you know, a lot of the jobs that have been created in the service sector, I think those jobs are going to go away. Look at what's happening to interest rates. The 10-year yield's now north of 2.7%. That's going to drive mortgage rates closer to 5%. Look at oil prices now above $103 a barrel. That's going to drain more discretionary income from American consumers' pockets. So I think this mini bubble in real estate that the Fed has managed to inflate is going to lose air, and I think the phony recovery that they've been predicating their tightening on is going to evaporate before they even have a chance to taper. So I think the market is preparing for something that's not going to happen.
Okay, well, you just led me into my next question, which goes right to the Fed. Do you think that this report is going to give Bernanke added confidence to taper QE, or will the report keep it going?
Well, he's not going to taper. He just wants to talk about tapering, because he can't admit that he can never do it, because then the world would perceive or appreciate, you know, how big the problem is. They used to talk about exit. They don't even talk about that anymore because that's impossible. So now they've dialed it down to a taper, but it's just talking. And I think the Fed is looking for a reason to increase QE, and I think they're going to find it before the end of the year. It's going to be because the GDP numbers are going to be lower than they estimate, and rising gas prices, rising mortgage interest rates are going to be threatening this nascent phony recovery. I think they're going to look for an excuse. They're probably going to say we're doing it because inflation is too low, but that's not going to be the real reason. That's going to be the excuse. But I think Ben Bernanke is going to come with more QE, not less. It's not going to help the U.S. economy, but it will hurt the dollar, and it should help gold.
Hey, let me ask you about China. Everything seems to point that there's a slowdown there. Will that slowdown impact the U.S. economy more or emerging markets more? And who should be more concerned?
Well, I think the United States should be a lot more concerned. And I think China's problems, in large part, are the result of their efforts to prop up the U.S. economy. I think the Chinese government is printing too much money to buy up U.S. treasuries to artificially support our currency so Americans can keep on importing. You know, look at what the trade deficit we had this week. It surged by 12%. Imports were the second highest level on record. A lot of those imports coming from China. We can't afford to buy these products, and so the Chinese are loaning us some money to do so. But this is what is undermining their own economy. If China would simply let their own currency rise and stop transferring their purchasing power to Americans, I think you'd have a much stronger Chinese economy that would directly benefit the Chinese workers who are actually producing all the products that their government is now allowing Americans to buy. But if it wasn't for that monetary policy, the Chinese workers would be consuming those products themselves because their paychecks would be more valuable.